Welcome to the Global Justice Report, an online production of the Center for Global Justice. I'm Cliff Durand, your host for today's program. The Center for Global Justice, El Centro para la Justicia Global, is a multinational and bilingual research center located in San Miguel de Allende, Mexico. The center is devoted to research and learning for a better world and empowering a solidarity economy. Due to the pandemic, we discontinued our in-person events over a year ago and instituted online webinars. Without our previous revenue-generating programs, we now depend on your donations to support these webinars and to be able to continue to pay our Mexican staff. You can donate at our website, www.globaljusticecenter.org. Today's program is about public banking, democratizing finance. You know, so much of our economic life is controlled by banks, private banks. When we need money, we go to them for loans and they charge us high interest. When our local governments collect taxes, they deposit the money in private banks, who then use it for loans or even speculate with it for profit. But what if we, the people, controlled the money instead? That's what the state of North Dakota did just over a century ago, when they established what is the country's first and only publicly owned bank. Based on the success of the Bank of North Dakota, now across the U.S., local and state governments are considering establishing their own public banks, in no small part because of the efforts of citizens groups sparked by the Public Banking Institute and our two speakers today. Using the principle of fractional reserve lending, by which banks can loan out 10 times the reserves they have in hand, public banks can leverage taxpayer dollars for public projects. Normally, when such projects are financed by bonds, half of the total cost goes for interest. Public banking makes taxpayer dollars go further. Public banks can finance green energy, affordable housing, worker-owned cooperatives. And instead of supporting wealthy shareholders, public bank profits return to the communities they serve. Well, our speakers today will tell you all about this. I don't need to go into it first at all. Our first speaker will be Ellen Brown, who is founder and chair of the Public Banking Institute. She is the nation's leading advocate for public banking and author of 13 books, including Web of Debt. Her latest book is Banking on the People, Democratizing Money in the Digital Age. Following her, Walt McCree will speak and continue to tell the story of public banking and talk about various banking initiatives now underway across the United States as well as around the world. He is a leader of the Public Banking Institute. And we're very happy to have both of them with us today. So they've together we'll probably talk for maybe about 45 minutes or so, and then we will have time for question and answers where you can all put your comments in for them to respond to. So let me ask Ellen to take it off and lead the discussion.
Okay, thanks, Cliff. Well, I did give a presentation a year ago, July, on public banking, and so we hope to not duplicate too much of that. I need to bring up my PowerPoint, sorry. All right, so but I do, so the way we're dividing it up is that Walt's going to talk about where we are today with public banking, and I'm going to go over some basics and the British versus the American system, which we didn't talk about before. The American system is basically money created by governments for productive purposes, money and credit. And of course, it goes back to, well, it really goes back to Benjamin Franklin, or farther back even than that, to the American colonists. And the British system is, even though, well, it's basically colonialism, but even though big countries no longer own the smaller countries, they're still doing a colonial type system through debt, particularly through the IMF. So just to hit some basics for people that are new to this subject, most people think our money is created by governments. That's not true. It's actually created by banks when they make loans. When I wrote about that in Web of Debt in 2007, it was first published, that was considered conspiracy theory. I mean, I wasn't the only person that wrote about it, but anyway, that was like not well accepted. But in 2014, the Bank of England actually confirmed it. They came out in their quarterly report and they said, contrary to popular belief, banks do not act simply as intermediaries, lending out deposits the savers place with them, and nor do they multiply up central bank money to create new loans and deposits. Commercial banks actually create money in the form of bank deposits by making new loans. And in fact, they said 97% of the money supply is created in that way. Of course, that was the UK money supply. In the US, it's not quite that high, but it's the same general principle. So here's how they do it, by double entry bookkeeping. So if you go to the bank, let's say to take out a $500,000 for a loan for a mortgage, the bank will simply write that money into your account. They won't get it from anywhere. It's just written into your account. And the way they write their own books, they'll call it a liability to themselves, because when you write your check to the seller of that house, assuming that the seller has another bank, then the first bank has to come up with $500,000 from somewhere, but they don't actually have the money. They borrow it from somewhere. They either borrow it from their own depositors. That's the ideal, because that's the cheapest way they can do it. Or they can borrow in the repo market, or they can borrow from the Fed's discount window, short term, and keep rolling it over. So they'll write that on one side of their books, and then on the other side of the book, they write it as a $500,000 asset to themselves, because you have promised to pay that back with interest. So they say the book's balance, it's 500,000 plus, 500,000 minus, comes out to zero. And that's the way they justify it. And you have that going on all over the country. So let's just assume that the bank that the check went into did the same thing. They just created a $500,000 loan, which and the money finds its way as a deposit into the first bank. So both banks would have $500,000 coming in as deposits. They would both have $500,000 going out, which they would transfer as reserves through the Federal Reserve. And both would say their books balance, but $1 million has just been created that didn't exist before, and that's where the money comes from. So it's not really a bad system. What's bad is who owns the banks and who directs it and who gets the profits off that. I mean, the fact that we're creating credit, you're really monetizing your own future promise to pay, which is a good thing. It's just that we need a little better management of the system, which I'll get to. So that system actually goes back to 18th century Europe, when the goldsmiths would take people's gold for safekeeping. And they would give the owner of the gold a little paper receipt, a gold receipt. And people quickly discovered that they'd rather have the receipts than the gold, because it was safer to walk around with them. You weren't going to get robbed, so likely to get robbed, and it wasn't heavy like gold. So the banks quickly figured out that people only came for the gold 10% of the time. So they could write 10 times as many notes as they had gold in their coffers. And so that was the beginning of the fractional reserve system. So they would lend these notes at interest, and they circulated in the economy as if they were money. And that system was picked up by the Bank of England. It was institutionalized in 1694. It was actually private investors that it was set up for the King of England, William III, who needed money to fund a war. So the bank would issue banknotes backed by gold, supposedly, and lend them to the government. And the government didn't have to pay back the notes. They only had to pay back the interest. And that's obviously the system we still have today. There's no way we're going to pay off a $30 trillion debt, but we just keep paying the interest year after year and rolling it over. So in effect, the national currency was rented from private bankers. And a year before that, in 1693, the American colonists, actually the governor of Massachusetts, issued the first colonial script. So the American system was that he too was engaged in a little border war, and he didn't have the money to pay his soldiers, and there was nobody to borrow it from. So he just issued these paper receipts, but they weren't backed by gold. They were just backed by the community. It was an acknowledgement by the community that the soldiers had done service for the colony, and that they would accept them in trade. And so these paper receipts circulated in the economy as money. Supposedly they were advances against future taxes, but it was a lot easier to issue the paper than to pull it back in taxes. So the northern colonies did tend to deflate or devalue their currencies by issuing too much. But in Pennsylvania, they figured out a solution to that problem, a sustainable solution, which was to lend the money. So they set up a bank. It was called a land bank. And Benjamin Franklin said, bills issued upon land are in effect coined land. Of course, Pennsylvania was his colony. So it was as if the farmers were posting their land as collateral, but apparently they never actually foreclosed on these farms. It was just, in principle, it was backed by land. So the government could print, say, this is just my own little model, but say you printed $105 and lent $100 at 5%, which was considered a very good interest rate at that time. And then you could spend another $5 into the economy. So there'd be $105 out there circulating that you could come back and pay principal and interest. And you could do that all over again, lend the same 100, spend the same 5. And it wasn't a pyramid scheme like our current system would, anyway, so that worked out very well. The people didn't have to pay taxes. There was no inflation and no government debt, except the colonies did. I guess that they did have a tax on liquor, but that was it. So the colonists continued to do that until King George forbade it. And that was because the Bank of England leaned on the king for obvious reasons. They weren't pleased with this system. They said the purpose of having colonies was not for them to be self-sufficient. It was to provide raw materials for the mother country. And so this caused a depression in the colonies because they suddenly lost their circulating money supply. They didn't really have gold and silver to speak of, and it triggered the American Revolution. And remarkably, we actually won the revolution, though we didn't really have any money. We just had this paper money that we created ourselves. So Benjamin Franklin was in England at the time, and he said, the whole is a mystery, even to the politicians, how we could pay with paper that had no previously fixed fund appropriated specifically to redeem it. This currency, as we manage it, is a wonderful machine. But this did leave the country. But by the end of the war, the Continental, which was the paper currency issued by the Continental Congress, was devalued almost to nothing. I mean, the phrase was not worth a Continental. I mean, it wasn't worth really anything. And so we had a new country, but it was pretty deeply in debt, like in debt to the French, who had actually lent real gold and wanted their gold back, that type of thing. So Alexander Hamilton was our first Treasury Secretary, and in order to get us out of that trap, he initiated what came to be called the American system. It was called that by Senator Henry Clay. So he formed the first U.S. bank as a publicly owned bank, and they agreed to pay off the states, or the colonies, which had now become the states, to pay off their debts. So they took investors in this bank. They sold stock in the bank, and you could buy your stock partly with bonds or this state debt, and partly with gold. So it did have some private ownership, unfortunately, but it issued the first U.S. currency backed by state bonds, and that system was called the American system. And so the American system versus the British system was basically locally issued currency versus a privately issued currency, privately issued banknotes, a national bank that issued sovereign credit. And Hamilton said that these funds should be allocated for infrastructure and development for productive purposes, and that you really shouldn't make loans unless there was the means to repay them. Whereas the British system was speculative investments, basically driving up asset prices, which is what we have today. And then under the American system, Hamilton said that it was important to have protective tariffs to protect the small budding new businesses from competition by the big the products of big foreign companies. But the first U.S. bank was a bit controversial, and when the charter expired, it wasn't renewed. And then Andrew Jackson shut down the second U.S. bank, which was even more controversial. Although quite a bit of development was funded before the second U.S. bank was shut down, like the Erie Canal, that sort of thing. So it was a very good system, but obviously Andrew Jackson didn't like it, and that left the country with no currency. We had no national currency, and you had all these little banks that popped up all over the place that were called wildcat banks. I mean, they weren't all wildcat banks, but anyway, they were state chartered, and they would just issue their own banknotes. So you had a lot of different banknotes being circulated around the country. They often didn't have enough capitalization. And when people realized how unstable their bank might be, they'd all rush to the bank and try to get the gold out at once. And then you'd have a banking crisis. So it was said that your bank was, the closer you were to the bank, the better off you were, because you could get to the bank and get your gold before other people did. So it's a very unstable system. Then Abraham Lincoln came to power with another he had another crisis on his hands, obviously, the Civil War, and no real way to fund it except to borrow from British bankers at around 30% interest. So crippling interest that would have put us in debt to the British bankers forever, probably. So to avoid that, he reverted to the American colonial system and just printed it. The government printed its own money, the greenbacks. In fact, he actually doubled the money supply with greenbacks, and it still wasn't inflationary. There was some inflation, because there's always inflation in wartime because of shortages, et cetera, but not triggered by these extra greenbacks. And the money was used for productive purposes, like particularly the Transcontinental Railroad, and set up a university system, et cetera. So it worked very well. And meanwhile, you had all those wildcat banks, which were a serious problem. So during Lincoln's tenure, the National Banking Act was passed, which attempted to get all the banks into a national banking system where they would have to invest in federal bonds as part of their capitalization. And to get the banks to join that system, 10% tax was imposed on these private banknotes that were being issued. But many of the banks, the state chartered banks, avoided the 10% tax by just reverting to the checking system. So that's where our current system came from, that they would still just write the loan into your account, and then they would give you a checkbook and you would write your own bank note, essentially. I mean, it was a note to be drawn on the bank. So it really was a bank note, but it avoided that 10% tax because it looked like you were writing it yourself. And of course you were. I mean, it was your own promise to pay that money back. So that's the system we have today. And again, they were still issuing 10 times as many 10 times as much credit as they actually had gold to back it. And that's why we still have a 10% capitalization requirement. But after Lincoln was assassinated, the greenback system was discontinued and silver was demonetized. Before that, there was a lot more silver in the country than gold, and people could take their silver to the mint and just have it minted into coins, and it was considered the people's money. And that system was silver was demonetized. So the result again was a shrinkage of the money supply. And this triggered a populist movement to return to the greenback system of Abraham Lincoln and sovereign money. And one of the leaders of that system was Mary Ellen Lease, who was called the People's Joan of Arc. She led the 1890s revolt against high interest rates that had been imposed on Kansas farmers. I wrote my first book on this in 2007 called Web of Debt, using she was supposedly the model for Dorothy in The Wizard of Oz. So I liked her a lot. Anyway, so she gave this speech in 1890 that she couldn't give it today. You know, this is still true. She said, Wall Street owns the country. It is no longer a government of the people, by the people, and for the people, but a government of Wall Street, by Wall Street, and for Wall Street. The great common people of this country are slaves, and monopoly is the master. We want the abolition of the national banks, and we want the power to make loans direct from the government. So that's what we still want, is loans direct from the government. But that movement failed, and instead we got the Federal Reserve Act in 1913 after we had a major banking crisis in 1906. And it was pretty much on the Bank of England model. So it's composed of 12 Federal Reserve Bank branches, all of which are 100% owned by the private banks in their districts. The central bank issues the national currency and lends or sells it to private banks. U.S. government can't borrow, can't issue its own money except for coins, which it, you know, my argument is we could issue some $1 trillion coins, but that hasn't actually happened. And the U.S. government is not allowed to borrow directly from the Federal Reserve. Instead, the government issues debt and then sells that debt to the primary dealers, and then the primary dealers can sell it on the open market, and that's where the Federal Reserve buys it, if it does, and it doesn't have to. So there's not a direct connection between our central bank, which has the power to issue money, is, you know, it's the deep pocket that can issue as much money as it likes, but it's not the central government. And what's wrong with this system today? Private bankers obviously determine where the money goes. They legally own your deposits. They can gamble with them. They can determine who gets the loans and the terms. They can refuse to lend. And when for state and local governments, they borrow through the bond market and they pay quite high interest rates. And so that's one problem. But another problem is just this basic mathematical problem that when banks create loans, they don't create the interest, they just create the principal. So they're always asking for more money back than they put out there. And in fact, over a 30-year mortgage, you're liable to owe twice as much. So the bank gets as much money as the seller of the house after a 30-year mortgage. And where's that extra money going to come from? It can only come from more debt. So it's a pyramid scheme. You've got more and more debtors have to be sucked into the bottom to sustain the creditors at the top. And we see from this chart that debt at interest always grows faster than the money supply, and that can only go on a certain amount of time until the whole system collapses. So what you wind up with is what's called the business cycle, as if it's a natural thing like the weather, but it's really the result of this system where banks can lend more money than people can pay back, and eventually the pyramid collapses. And those people or investors or companies or whatever that have assets are able to buy up the collapsed assets of the people that have to sell at distressed prices, buy them up cheaply. So the rich get richer and the poor get poorer. And that's the way it goes. Widening the wealth gap. And then we know that when you have a particularly wide wealth gap, that's when economic crises happen. And that's where we are today, unfortunately. So today, debt is the new serfdom, essentially. And this is particularly true in other smaller countries that are stuck with these IMF loans, where they have quite stringent austerity requirements. And you can see from this chart. So, and the interest is, I heard it was a whistleblower from the central banking system in Europe who said that they intentionally would set the interest rates at rates that developing countries couldn't pay. The intent was to keep them trapped in debt indefinitely. And so to pay off the debt, they, of course, wind up selling off their resources. And that's the idea, to expropriate resources from these smaller countries, just like the colonial system of the British in hundreds of years ago. So I'm going to hand it off here to Walt, but you can see here that as this chart says, we're back. We still have a feudal system. It's not politically a feudal system. It's not, it's not militarily. It's not like we own these other smaller countries, or we own the people that are forced to work for the system, but they are owned by the people at the top by debt. They are trapped by debt, and often trapped through life by debt, or through the life of the country, or permanently. Okay, Walt, have at it.
All right. Thanks, Ellen. You need to stop sharing your screen so I can pick that up as well. And thanks, Ellen. It was very depressing.
Sorry.
Let's see here. I'm good. No, actually, it wasn't depressing. It's really quite fascinating, of course, to see how this all has evolved through the years. Now, I'm really wanting to share something here, and I'm going to see if I can. Are you seeing anything there?
Not yet. Yes.
Not yet?
Now, yes. Now it's up.
You are. Okay, great. Okay, good. I just need to remove some of this stuff here so I can, I want to, now this feudalism thing really struck me as being a remarkably valuable example of where we are, and certainly
Excuse me, you lost your charts. You now got something else up.
My charts?
The chart's not there anymore. PowerPoint's not there.
Okay, kids. Bear with me. This might be the most entertaining part of the day, is how Walt gets his technology to work. And I hate it. I hate that I'm not more adept at this, but okay.
I think you'll live.
You think so? I will say that let me just try this one more time. That's not it. Okay, now maybe we have it here. Okay, stand by. How's that, guys?
Yeah, yes,
You've seen feudalism
yes,
then and now?
yes.
All right then, fellow serfs. Uh, I'm happy for that. The theme, the topic of this gathering is to democratizing finance. And as you can see, this chart does a beautiful job in illustrating how money is not democratized at all. It's, you know, it's a tool that locks in the power structure that we've already known. And I was mentioning to earlier to Ellen, this chart, this pyramid doesn't even show where the real power is. You know, certainly we have central bankers, but above the central bankers, we have the BIS, the Bank for International Settlements, and then and part of the whole international cartel of money, all of which, of course, does not represent democratic interests or needs. And then, of course, the most extreme, right at the tippy top of the pyramid, is really those 8 people who own as much as 50% of the rest of the globe, of the citizens of the globe. So you see that democratizing money is a well, I won't say it's a pipe dream, but it's certainly anathema to the money powers, which of course control the private banking industry. And of course, feudalism, while that might sound like an extreme term, is really not so extreme. It's exactly what our system is, if feudalism would be defined by a privileged group of people who have the power to prevent and deprive or diminish access to, you know, personal wealth and economic equity. It's an inside game, right? And it is because it is our mission as citizens who want to create peace, justice, fairness for all, is to really basically wrest some of that power back, as Ellen said, and so clearly, back for what to where the people deserve and have had for brief period of times where we've had it. Money is, you know, money moves the world, and banking moves money. So, but money as a device is really a relationship. You know, it is inherently democratic insofar as everybody needs to have access to it. It's built on a civic agreement. Banking is a utility that should be worked serving all. Of course, it has unequal power to determine possibilities and prospects and outcomes. So money is the driver. But of course, this feudal pyramid keeps any democratic initiatives in check. So it's obvious that the corporate controlled money system is focused on profits and power, not on community interests and on community and public interests. So let's talk about public banking and public power. What's happening to democratize our monetary power, and where is it working now? Certainly, what does it mean to democratize finance? Well, I think we'd all agree that it means basically providing just and fair access to affordable credit and capital at the street level, not the Wall Street level, at the Main Street level, as well as the responsible deployment of money for the public, for the commonwealth, in public investment, for public interest items and infrastructure, et cetera. It really calls on us to stand for and verbalize a willingness to transform our economic paradigm, which the current paradigm, generates and tolerates scarcity and deprivation through exploitation, through predation, despoilment of our most precious treasures, the planetary resources, communal resources. It really means to democratize finance means to end the realm and the particulars of predatory finance. So public banking is one of the ways that we can do that. We have to acknowledge that the power of the banking franchise is key for delivering this monetary power to people. So, as Ellen pointed out, banks create new money. It's a wonderful device. It's like the money tree to be able to create money. Well, if you can do that, you don't have to borrow from the private banks and pay all of the overhead for that, then you have the start of some control on your future and on your own assets. Local monies right now, local economies have to, of course, borrow from the Federal Reserve. I'm sorry, borrow from the private markets. But banks do not have these funding problems. And as Ellen said, most of our money, the vast majority of our money comes from private banks. That great leveraging thing means that they can actually create new money as credit for a community. The beautiful thing for corporations and the banks is that they can go to the Fed and get money for almost free, whereas we need to go to the private markets and borrow at market rates. So state and local governments pay an outrageous amount of money just in interest and fees, $160 billion every year being extracted out of our cities and states and communities. And as Cliff mentioned in his opening, that means that, that ultimately it implies that the cost of our infrastructure is essentially doubled in the process of repaying the loan. So the private capital markets are in control. Interesting to note that because states and local governments want to maintain their credit rating within that, that banking realm, that ecosphere of credit as determined by market capital judgments, they pay their debts to the banks and the bond markets and Wall Street before they pay for their civic responsibilities. For example, Los Angeles a couple of years ago paid $230 million more than it spent on its streets and roads and alleys and so forth to pay an interest rate swaps scam. Philadelphia paid about $500 million with their school city and the city itself to get out of these interest rate swaps. Chicago closed down 20 schools, all to be able to pay Wall Street. And of course, those stories go on around the country. So, we need our own bank. This is one design that we considered and name, but perhaps it won't look like that. Local governments, of course, can have the franchise of public banks. And of course, we are not alone. All around the world, public banks have about 25% of the banking assets. That amounts to, over a course of about 900 banks, that controls about almost $50 trillion. Except, of course, in the United States, public banking has only one example, and it's a brilliant example. But when we're talking about democratizing finance, this is the story that we love to tell. It might be the only one we can tell, at least in this last 102 years. But here's an example of how a populist movement, even though it failed nationally, succeeded in North Dakota with this wonderful uprising by the Nonpartisan League, a bunch of citizens, a bunch of farmers that said, look, we know we're getting screwed by the railroads and by the bankers in New York and Minneapolis and by the granaries and so forth that aren't paying us fairly for our crop. Let's take over the government. And sure enough, through effective democratic organizing, they did that. And created this bank that has been the stellar example of what banking could look like in the public interest. As you see on the slide here, it has the lowest unemployment rate, the lowest default rate, and importantly, the most banks per capita. Now, that has the impact of replicating a model that we were talking about before we started this conversation today about China. China is, running circles around us in terms of its investment. I'm sure Ellen will give us some more examples of that a little bit later. But their banking model gives money directly into the local economies. Well, the Bank of North Dakota does something very similar because it doesn't make retail loans. It provides money to local community banks and credit unions. So therefore, you have people, bankers, who are operating this trusted local utility of extending credit to people that they know, to businesses that they want to start. to protect resources that they are themselves invested in. So now that's not what Wall Street banks do, man. You know, Wall Street banks speculate in all kinds of extrapolated markets, and they will even control markets with their investment dollars. But not here. In North Dakota, you have an economic system that is stabilized and reinvigorated by by its constant investment in itself. As indicated or reported by the Wall Street Journal, the Bank of North Dakota is more profitable than major Wall Street banks, higher returns on equity. This past year was the first year in over 20 that the state bank did not have a record-breaking year for profits, but it has constantly been providing a return on equity, the sign of profitability, between 18 and 26% over all that period of time. So it's really quite impressive. Why is it so profitable, one might ask? Well, obviously it doesn't have a lot of the costs that private banks have. No shareholders, fees, bonuses, commissions, ATMs, high-paid executives, advertising, et cetera, et cetera. It has also a massive deposit base because by law, the Bank of North Dakota is the depository for the state. Lots of flow there. And of course, as you see, it partners with local banks, makes the local bankers really happy because they are more profitable than anywhere around the country on that in their category. And of course, the savings are passed on to the borrowers in the community and of course to the state as well. So what's happening around the country? Around the United States, that is. The movement to create new American public banks is really a fine example, as I've been saying, of how we can democratize finance. Now about a decade old, it's a national campaign ignited and driven by the common sense logic of controlling our own money ourselves and keeping it at home to invest in ourselves. You know, it's either that or continuing an unsustainable pathway through the much more long-term debt path that Wall Street requires states and cities to participate in, which limits their ability to have the credit resources they need, but it certainly props up this huge industry. Now, what's going on around the United States these days, I'm just going to touch on a couple of them. Starting out on the West Coast, California has been a hotbed. That's where Ellen's from. That's perhaps one of the reasons, although she stimulated it all around the country. But San Francisco has a very serious task force underway to create a bank within the year. They're looking at Los Angeles is also on track, and there are about 7 or 8 other California cities that are looking to take advantage of what has now become a state law that codifies creation of public banks. AB 857 has laid out a menu of requirements and pathways for cities and municipalities to start their own banks. Some very interesting processes have been learned in the process about how to start these banks. It's not easy. First of all, you're up against the banking industry itself, who typically is opposed. But you know, they have the money, we have the votes, so to speak. At least some of that is manifesting in California, where the citizens have stood united through some of their organizations to get some of these bills forward. So lots of good stuff going on in California. Just up the road in Portland, Oregon, and in the state of Oregon, they've been having some vestige of that for the last 10 years, and now have a new bill in the works. Tacoma, it's up in Washington State. Very similarly, it's a 10-year-old process. They're this close to getting a bill through the Washington State Senate. That bill is of a bit of a different design that looks like having a cooperative public bank. Cooperative meaning that the cities and municipalities and state and government agencies of the state can pool together and participate together their resources to be able to share the ability to create credit. Colorado has been on the books for a while. It's making Boulder and Denver are 2 of the spots. New Mexico came very close to getting a bill passed this year. They've been working on it since 2014 in Santa Fe and Albuquerque. We've had a variety of other things in the Midwest. Interestingly, a number of the initiatives were started by Tea Party people in Michigan and Alaska, and some similar interest in Pennsylvania. On the East Coast, we have a bunch of things happening. Vermont had, again, got very close to creating a public bank years ago, but because of the influence of the banking lobby at the Capitol, they now have a revolving fund instead of a bank. Now, let's just stop for a minute and take a look at what a revolving fund is. When you hear of a green bank or an iBank, but it doesn't matter where it is in the country, they're primarily talking about not a bank, but a fund, a revolving fund, in which they have some capital assets that are either they come through appropriation in the legislature, but they put it into a fund and they say they leverage it. But what they're leveraging is they go to private capital party and say, hey, we've got some money here, we'll give you X amount of dollars to join us in this project. And that's not leverage. I mean, it's expanding the playing field. It's a little like a public-private partnership, but it's not generating or creating new money. And that's very important, because if you are creating new money, you're actually expanding the economy with new funds, new credit. Whereas if you're borrowing from Wall Street, you're recirculating debt money that's simply just going to be acquiring more and more debt and further tying up your local economy with those obligations. All right, so again, going back to the map, New Hampshire, Vermont have both, and Maine have all had momentum. Massachusetts has a bill just about to hit the floor there. New York has several different bills, one for New York City, one for the state. The state of New Jersey, our governor, Phil Murphy, ran on creating a public bank, and he created an implementation board, which is in the process of discovering how to go about this. It hasn't been the easiest process for a variety of reasons, but I think that's kind of enough around that, except we could look internationally. I don't think I'll do that. You can look at the German models for public banks, the Chinese, the Japanese, the Brazilians, Costa Rica, Ecuador, etc. These banks have game, and of course, as I indicated, $50 trillion of assets held across there. So what else is going on in the country beside the local efforts? Well, one thing, and this is obviously a very timely one, is the National Infrastructure Bank bill, where we kind of recreate the Reconstruction Finance model of FDR. As this chart indicates, you see that this is there's a $5+ trillion need for infrastructure. We know that public-private partnerships are too expensive. They take 10 to 15% over the cost. This bill, as it's devised by our friends at the National Infrastructure Bank Coalition, proposes that they can raise this money in a very clever sort of a treasury bond trading format that will not raise the national debt. And it follows up on the model of the Reconstruction Finance Program, which started out with a $500 million capitalization, but really, and lasted for many years, ended with a profit and funded the New Deal, the World War II, the rural electrification thing that built all these dams, all of the wonderful accomplishments of the mid-20th century in America. Most of them can hand their existence to the creation of the RFC. So that's basically the model on which the NIB coalition is now working. And then there's the Postal Banking Act, where once again we dip into our American history and also international practice to see that post offices are there are 30,000 of them in the U.S., almost in every significant community. So they have location that is much more distributed than community banks, which have been going out of business by mergers and acquisitions out of their, wanting to take their profits and also because banking's a tough business, especially in a low interest rate economy. So there's less access to bank services. And now we have a bit of a crisis in that field because about 25% on average, depending upon who you're talking about, sometimes as high as 50% in Hispanic communities are either unbanked or underbanked. Some people spending a quarter of their income on check cashing and the expenses of going across town to cash their money. And of course, the predatory aspect of loan lenders, of the payday loan lenders. So the idea of having a postal bank will restore what we had in the country from 1911 to 67. It was very popular. Everybody was relying on the post office because the banks at that time weren't too reliable. So now that act has been is widely supported within the public postal system and across wider sections of the public. As you may know, there's been some chomping at the bit by private parties that want to take over, want to privatize the United States Postal Service. A very stupid idea, but certainly we won't put it past the capital speculative interests. And let's take a look at one more thing that's on the docket in Congress now, and that is the Public Banking Act, which we're very excited about, although we're not putting our money on it, given the complexity, the requirement that it makes to establish and support, even through incubation, capitalization of new public banks, creating a new relationship for the Federal Reserve to provide stability and liquidity, to share some of the resources that the Fed does with cities and states that own these banks, much in the same way that they do with corporations, hedge funds, and private corporations who can get cheap money. I mean, it's ridiculous. The cities and states of the nation do not have parity with the private corporations at the Federal Reserve. That would be one thing that the Public Banking Act will do. Now, even in Mexico, AMLO, Andres Manuel Lopez Obrador, has provided some interesting monetary leadership, and I would put this in the category of democratizing finance. AMLO has declared his intention to appoint a new leadership at the central bank that, as he says, has a greater sense of social and moral economy. He observes that the private banking industry has really exploited and taken advantage, is predatory, and also not gone down to the rural level. And with the neoliberal financing model, Mexico has had slow growth. This new program will allow the state, the government, to assume responsibility for development without the intrusion of foreign interference in finance, and intending to counterbalance the banking industry. And his plan is to basically use the military to create 2,700 branches of a bank of well-being, providing rural areas with saving and transfer services. I just love the bank of well-being. I wish AMLO luck. Carry on, brother. So we need public banks. I hope we made that clear, because they are the singular agency for us to be able to execute democratic power in reclaiming control of our money. They can do all the things on the screen, but most importantly, they begin to restore the power to the people. And that's really what this is all about. It's about reclaiming our money, the money as a public utility, and it comes out of the full faith and credit of our government and of our communities. This is why we need to create public banks. We want to invite you to visit publicbankinginstitute.org to find out more, of course, to join in the conversations that we have, and of course, go to Ellen's site to find some really fascinating discussions and to take advantage of her writings and observations. So that's that.
Thanks,
Well,
Walt.
thank you, Walt and Ellen. You've just given us a whirlwind tour through banking and a crash course in public banking. I'm sure that there'll be many questions and some comments. Let me say a word about how we'll handle this Q&A session. Since many of you are watching on YouTube, you don't have any way of getting your questions to us directly. What you need to do is send an email to global.justice.cliff@gmail.com, and I will pass your questions on to Ellen and Walt. For those of you who are with us in the Zoom room, of course, you can ask your questions directly. And if I put my screen on gallery view, I can see everybody here. And if you want to ask a question or make a comment, just wave at me and I'll call on you. So, who wants to start this off? Okay, Judy, unmute yourself.
Okay, my question is for Ellen in California. First of all, we have to deal with this horrible recall situation. And what do you think is going to happen with our governor?
Dear. I make a point of not taking sides on any political issue because we have people on all sides of everything. So I don't know. I could ask you, what do you think?
Well, I certainly hope we don't end up with a Rush Limbaugh, and except he's worse. He's black and he's a racist. So, I mean, could be something that's so obviously undemocratic. The whole recall situation just bothers me. So.
Yeah, well, I try to understand both sides on these issues.
There's no both sides. There's a no requirement, a no on the recall. That's to start out with for anybody involved in California. And I finally relented. I do Peace and Freedom Party, but I finally relented and I voted for the Green fellow. He's the only one that I saw on the voter pamphlet, in order that if Newsom is recalled, none of the other, horrible candidates is elected to the office. Yeah. What they're saying is that you could elect somebody with something like 13% of the vote.
I know. Well, I voted for you, Ellen. I remember when you were on the ballot.
No.
Yeah, I ran as a
could have
Green.
had public bank. Oh, I was happy to vote for you.
Thanks. But that was for treasurer, but I ran as a Green. Yeah.
Yeah.
And she was relieved to not get the job.
Well, yeah, that wasn't the intent to get the job. The intent was to get the idea out there about public banking, which worked. I think it was quite effective.
Moving beyond California
Politics
currently, this raises an interesting point. Even some conservatives have favored public banking. And if you look at North Dakota, it's certainly a very conservative state. While it was a populist movement, a progressive populist movement that established the Bank of North Dakota, still today in the present very conservative state, there is great popular support for it. It's not tarred as a socialist institution, which suggests that even public institutions like that, if they have the chance to prove how they can benefit people, become very popular even among conservatives.
And it was
it's just a common sense sort of idea. I mean, why should we be giving away all these profits to Wall Street when we could be doing it ourselves?
The latest, the most recent president of the Bank of North Dakota, Eric Hardmeyer, said he wasn't sure and didn't think that a public bank idea would play in North Dakota these days. And in fact, of course, it was very quickly shot down by the bankers and they sued them and so forth to try to shut it down. And of course, and the popular uprising was overturned. And so the money interest got into power in North Dakota shortly after they created the bank and the state granary. But they were going to shut down the bank and take it out of competition. But they said, wait a minute, this is pretty cool. We got our own bank. And as a result, the rest is history. Now, you know, and BND would be a much bigger, even more impressive bank now, except that it wasn't until the 80s and mid 80s they started to really do some progressive kind of investment. So it's kind of interesting. I'd like to segue into a question that Norma had about coining land. Ellen talked about coining land as the Franklin, Pennsylvania model for creating credit. I'd like to suggest, or I think it's pretty clear, that there are things called land trusts. Actually, there are things called land banks. But land banks are in the nomenclature, the vernacular of municipal government, is that this is the money that's banked for local developers to basically get access to. Land trusts are areas that I think local public banks could be enormously powerful in supporting, because every municipality and state has assets, land assets, that it could take in and use as equity to leverage credit, just as we did in our first American bank. So I think there's a great hope there and a great promising model for us to follow.
Mm-hmm.
Yeah, I would add, what was interesting about that to me was that cities and states now could use their assets to back a bank, you know, to capitalize the bank. Right. Of course, you don't want to sell off your Capitol building or your parks or whatever, because you make bad loans. But still, the model has happened before. And we've discussed, it does seem to me, we just need access to more money. The colonists had the advantage that they actually were issuing their own money, and states can't do that anymore. But cities could do it. Cities could actually legally issue their own digital currency, let's say, and expand the money supply and use it for specifically productive purposes. And that could actually get their economies rolling again.
Locally only, or could they use it, you know, from New York to Chicago?
No, because you couldn't cross state lines. I mean, it's the same as the marijuana problem, if you know where they're, you know.
Yeah.
But locally, yeah, you could do it.
Some people have been putting comments and questions in the chat box. No one is monitoring that. So if you have something you want to say, please wave at me and I'll call on you so that you can ask your question or make your comment directly for all to hear.
I would jump in for see John Schreiner make notes that most of the banks in Mexico are not Mexican, and I think it's exactly that point that is driving AMLO to say, well, look, we need our own banks for all the reasons that we've just been talking about. Mm-hmm. These guys are not vested. I mean, they're sucking the profits out, you know. And as opposed to investing in communities. So yeah, I think that's one of the cool things about AMLO's initiatives there.
I can see the chat. I see the first question is, he didn't hear me clearly, I guess. The three sources of money. Oh, right. Okay. So a private bank can draw on its own deposits, and that's what it prefers to do, because most banks are not paying any interest on deposits. So they're getting that money for free. They're just using it for liquidity, of course, but they move the reserves from their reserve account at the Fed. I mean, it's a very complicated system, but the reserves reflect the deposits, although they aren't the same system. And anyway, I won't try to go into that. But so it's their own deposits are usually free, or they can borrow from the repo market currently at 0.25%, or they can borrow, and then they have to post collateral for that. or and usually federal bonds, or they can borrow from the Federal Reserve itself at 0.25%. Although that's the discount window, which it used to be that banks didn't borrow there because it had a stigma attached. But today, as of a year ago, last March, the Federal Reserve came out and said, no stigma, come one, come all banks that are all qualified depository banks in good standing can borrow almost for free at the discount window, 0.25%. The problem is it's only 3-month loans. And so that's one thing we would like to get changed. If they would agree to roll over those loans, that states should have equal access to big bank what big banks have. We should be able to borrow almost for free as well.
Yeah.
So there's the three.
Yeah, I mean, the whole thing about interest is that it's a complete contrivance. It's a franchise and a privilege we've allowed private parties to have. And it wasn't so many centuries ago that interest, usury, was outlawed. It was illegal, considered morally and ethically repugnant, and even the death penalty was used to enforce not using usury. So here what we've done is we've set up an industry built on usury, which is using its power to extract out of our economies our futures, man, our ability to do what we want to invest in. So, when I think about democratizing finance, I like to throw in a little bit of urgency in understanding that if we do not execute on getting some community public banks, we will be riding right down the railway run by the central bankers and the global banks, and we'll just take what we get.
I wonder if you had mentioned earlier the infrastructure bill now before Congress that Bernie Sanders has been championing, and if it gets passed by Congress and signed by Biden, will become law. But the question is, where is that $3.5 trillion going to come from? Can you explain that a little more?
Ellen?
Sorry, I thought it was a question for you because you talked about it. I was reading the chat. Sorry, 3.5. Oh, okay. So the plan, it is a little controversial, but anyway, their plan is to to buy bonds, existing federal bonds. So they'll buy the bond and pay an extra 2%. So that will be a motivation for people to sell the bonds. And they'll use that as their capitalization. And the 2%, if they're fully loaned up, they can lend out 10 times as much as their capital. So that's really only 0.2% per loan that they're paying on these bonds as capital. And then the interest itself goes back to the bondholder. The interest that's paid by the federal government, the bondholder also gets. So they're getting 2% more than they were getting originally. And that's the plan. But there is a little problem. These aren't, this isn't really a liquid stock, and you got to hold it for 20 years before you can sell it. But anyway, that's the plan. And then for liquidity, they're calling themselves a depository bank, although I haven't seen the structure for, what kind of deposits they're taking, or in other words, they haven't really done a complete business plan. I know they've discussed it, but we haven't seen it yet.
Ellen, I just want to add, Ellen, we could, and it could certainly replicate the RFC model, which was to sell bonds, most of which were purchased by the U.S. government, the Treasury, right? So we have, there's no reason why we can't do that. And of course,
except that we have a Congress, it's probably not going to pass that. That's the problem.
But the point being that we could do that without affecting our real exposure to outside lending. We would be creating new money, right? So that would be the virtuous, sensible thing for us to do.
Yeah.
Alana has her hand up.
Yes, I do. Thank you. I'll get the video. I was here the whole time, but I was listening on the website and I just now joined on the Zoom so I could say hello and thank you so much, Ellen and Walt, for a great presentation. Now, 2-point question. So what would it take for, say, a city like Baltimore to be able to deposit their tax dollars into essentially a local public bank like you're talking about? And two, the history of the banks in colonial times backed by the land coin. What might it take for a city to simply, with their land value, back the public bank with their land value, which is created after all by the community? So those are my 2 questions.
Yeah, well, I think you've got the answer for your own question on the land value. I know that's your area of expertise. What do you think?
Yeah. Well, the other part of your question is what's it going to take? So,
yeah, how legally?
Yeah. Well, legally, what's it going to take is a little looking at whether or not there's any prohibition that Baltimore may have at the state level. But on the other hand, I don't know if it's a home rule city. If so, there are certain provisions that it could employ. The city of Philadelphia is doing that very thing now. They're looking at creating a Citibank, Philadelphia Public Bank, that is basically created as a city agency under the municipal law, under municipal laws.
Oh.
And
Shh, I'm muted.
No, you're not, Mike, actually. Yeah, hi, Mike. There you go. Thanks, man. Corvallis, let's hear it for Oregon. The opportunity in Philadelphia is to create a municipal agency that is a bank and that would be allowed to accept city deposits. So it becomes a city depository and it can lend then to itself out of that agency. Now that's being looked at from a legal perspective. It's already got some initial legal review and it seems to be a green light. But I think that might be one thing that Baltimore could consider. There's certainly the state level, and we've worked with Maryland on creating a state public bank. There's some interest. So you got a great governor, very progressive-minded guy, and certainly the times are changing. So what it's going to take democracy. It's going to take people exercising their power as people to influence these things.
Great. Cliff, can I have one more quick question?
Certainly.
Okay. Now we know that BlackRock is buying up residential housing. I think they're already on to 5-6%, and that's driving up housing costs, correct, for the regular home buyer. So let's imagine BlackRock is buying up housing in a city, Philadelphia, Baltimore. Then those profits by their ownership of housing, collecting the land rents from the housing, is going to go out of the city. So how do we deal with outside entities that buy up our land in our cities? How do we deal with that with a public bank?
Well, I would say that that's a huge problem. I mean, it's just, but it is emblematic and symptomatic of the capitalist system, the unregulated, unconstrained, have at it. I'm at the trough. I can take anything I can afford. Well, that's how we're losing our equity and our grip as communities. What you can do if you have a public bank that has any capital heft is to say, okay, these lands, these houses don't have to be sold. We'll take them in. We'll buy that as equity and we'll use that to create our own mortgage financing plan. There are plenty of options, ways to create affordable mortgages. And if a public bank is able to access or acquire the equity, perhaps through tax foreclosure, through other sorts of definancializations, the public bank would give you a tool to work with for just that sort of thing.
Yeah,
So it would be like, oh, sorry.
No, go ahead.
entities like BlackRock can borrow for almost nothing. And so we, the city or the public bank, should have that option as well. We could compete with them at least.
So if a city's buying back the city's land with a public bank, is that a little like during slavery times when people would buy people out of slavery?
Let me give you an example from North Dakota. It's not, well, it's not, I mean, I don't know about that metaphor, Alana. I don't know enough about how that happened, but buying people out of slavery, I suppose, is a little like that. In North Dakota, during the Depression, the Bank of North Dakota bought farms from those parties that were being foreclosed or that were facing foreclosure. So the bank actually bought the land and said, you guys don't go anywhere. Nobody wants to live here in North Dakota except you. So don't go. We'll hold on to your property, hold on to your land. And after this blows over, we will refinance it and make it work for you. That's exactly the model we're talking about here, where the equity can be assumed by a larger capable authority, qualified authority, and then refinanced later on for the owners. Now, interestingly, one of the things that BND unknowingly did was when they bought the farm, quote unquote, they bought the mineral rights under the farm. They didn't know anything about oil or fracking or any of that stuff. But so years and years later, those rights became hugely valuable. So just a side bit there. So Alana, as you know, that's the land.
And then the minerals become publicly owned. So now what if a farmer wants to sell the land? It's not going to be foreclosure. They just want to make a big profit. Then would they not go to the highest bidder when they sell their land? And then it would be into the high value land value market system if they did that, and that would go out of the community.
Well, if the property is held by the bank, they would have to pay off the bank loan as part of the sale, right? I mean, so whatever overhead they've got on the property would need to be settled out, and then the rest would be whatever they have over that would be
profit. Would be their private profit.
Yeah.
Thank you.
Okay, thank you, Elena.
Nice to see you, Alana.
You too.
We have a question from a viewer on YouTube. Great presentation, says Carolina Goodman. A little fast for me. Will you be able to share the slides with us so that we can review and share with others? Is this slide presentation available on your website?
We could put it on there,
Sure.
or we can give it to you if you want it.
Well, why don't you do both?
Okay.
If you send it to me, then anyone who requests it, I can send it to. But if you have it on your website, publicbankinginstitute.org, that would be a valuable resource for people to have access to.
Sure.
Okay,
Norma.
What does Cuba do? How does Cuba run its financing, or whatever they call it? I haven't ever examined it. I keep referring to, see, I tell my, anybody who will listen, that capitalism is tremendously complicated. All the things you've been talking about, trying to get to stuff that's serviceable for the people, you have to do this and you have to do that, and I keep thinking that perhaps Cuba has set up something that is serviceable and uncomplicated and just takes care of business and so on. Does anybody know?
Well, Norma, I don't know about you, Ellen, but I've been to Cuba. I would say that their system is screwed up, and they have two currencies. One that is the peso, which is they use on internationally, which has a very low rate of exchange, and then they have a thing called the CUC, which is their Cuba-based currency. But they don't have an open playing field at all. It's very, and now it's been a couple of years since I've been there, but it was very constrained. And I understand that they're freeing up the private capital market for more people to earn money on their own. So hopefully something more.
Of course, that's not an objective of the socialist struggle. I mean, is for people.
They're communists, though, right? And it's so the socialist theme might be a little bit more characterized or more restrained in the post-Fidel Cuban example.
Well, Cuba is actually now trying to unify its currency with a single currency.
They've wanted to all along.
Yeah,
They just
right.
haven't been being allowed.
But they are doing that in the current year.
Right.
And the state has the capacity to make those kinds of changes under a socialist system. But how the banking system in Cuba operates, I think, is the basic question that is being raised. And I've never been able to understand it, but
That's not unusual for us living in capitalism and having to try to figure out how to get along in capitalism. Is not unusual for us not to be able to figure out the alternative.
but perhaps Ellen can talk about the Chinese banking system and what they are doing.
Yeah, well, I just heard a good interview by Richard Warner, who was saying that they actually had the most successful community banking system, basically, that originally they just had one bank, or no, the Soviet system was just one bank, and that did not work out so well. You know, it was publicly owned, but you can't, in a big country like Russia or China, a centralized bank cannot know what little businesses to invest in, et cetera. So what they did in China, which was very successful, was to form small public banks all across the country. And those banks are, they're not federally government owned. They're owned by the county or whatever that locale is called, the province or whatever. And so they know their local businesses. And the way to be a successful bank or to do a successful credit system is to make sure that your loans are for productive purposes and not for speculative purposes that will just drive up asset prices. Like buying houses that are already built is just going to drive up the prices, but to build houses is productive. So anyway, if the local banks know their local community, they know who they can invest in, and they need a decent interest rate. I mean, one way that the local banks have been crushed is with these zero interest rates or very low interest rates, where the local bank just can't make any money, so it winds up going out of business or merging with the big banks. Now, I know that in China, they also, just recently, they've been cracking down on non-performing loans. But what they used to do was ignore the non-performing loans. They just let them ride on the books because it didn't really hurt anything. And arguably, we are about to have a serious homelessness crisis because the moratorium on rents has been shut down. And a lot of landlords also are going to have trouble with their mortgages because their renters haven't paid for the last year. And they're not going to have the money now, so they're probably just going to be out on the street. But anyway, we're going to have a serious housing crisis.
Please call it a more serious,
okay.
Please.
More serious. All right, we're coming into some more serious stuff, right? But it's arguably, those loans were created on the books of the banks in the first place. So you could arguably just write them off in the same way. But I know the argument will be that will be inflationary because that's going to put money in the pockets of whatever, Yeah, so I'm sure it would get pushback, but it could be done if we had control of the banks or whatever, since the money was just created for the mortgages anyway, was just created on the books of the bank. If we just passed a rule and said, all right, we're going to allow non-performing loans like the Chinese do, we're not going to worry about that. That would solve the problem, except that it might be inflationary. And, I mean, you might get a flood of liquidity that would be nobody really knows how that would work out, but we definitely need some sort of, we can't do a moratorium anymore, but maybe some sort of debt jubilee.
One of the really amazing things in China was after the financial crisis of 2008 and the contraction of global economy had a major impact on China. China just got itself out of that difficulty with massive infrastructure projects, building whole new cities, even though maybe there weren't people to inhabit those cities. Whole apartment buildings that were built and as I understand it, still aren't occupied. But they provided jobs, they provided income, and kept the economy going even during that downturn. That's an illustration of what a state-controlled financial system can do, even in the face of crisis.
Yeah, and we should do that too. I mean, we know we've got, like, the water infrastructure is just collapsing. We need that stuff, and everybody agrees we need it. But you've got the competing interest of these water barons, that think water is the new oil, and they want to keep it restricted so they can sell private water or whatever. But we the people, there was that old joke about the old New Orleans flood, and the spaceman came down and said, "Oh, you've got quite a mess here. Why don't you rebuild?" And the mayor said, "Well," or the spaceman says, I guess you don't have the workers." And the mayor said, "Oh no, we've got workers." "Well, I guess you don't have the materials." No, we've got the materials. What we need are these little green pieces of paper to get the workers and the materials together so they can build the stuff. And the spaceman says, "Beam me up, Scotty. There's no intelligent life on Earth," or something like that. I mean, we should be able to do the same thing. Just build the stuff. It's productive purposes. You're putting people to work, producing something that will increase the GDP. It will increase productivity because it'll help the farmers and they'll sell more products, and it'll help, it'll make people want to come back to the city or whatever, all those things. You need to build that infrastructure, unlike quantitative easing that just pours money into the speculative markets. You need to direct that money in the right place, and then it will not be inflationary. It will be productive, just like for the Chinese.
Well, and let's, Walt, you have.
Well, no, I was just going to add the other cool thing that they did was this how many miles of high-speed rail in 10 years?
12,000. 12,000
of high-speed rail. And of course, everybody says, yeah, we can't even get a train from LA to San Francisco. That does, so here we are sitting out, well.
What's the ecological effect of running more and more transportation processes across the earth?
Well,
they need to improve the ones we've got. I think that's the first issue.
Okay.
Yeah, absolutely. There are new. And by the way, Mike Belstein in Corvallis, since I name checked you before, Mike, nice to see you. What's for lunch?
I'm making jam today. It's busy, grape jam, but we're got an awful lot of fruit to deal with this time of year. So
wow, you're lucky.
Yeah. Anyway, I kind of related to the last comment about the effect of this increasing transportation. I kind of feel that that a lot of investment depends on using natural resources. I mean, that's what it brings to get, it brings investment, financed by banks or whatever form, brings together resources to do projects. mean, that's, we have to have capital accumulation in the system that we're living in now. But I'm concerned about the ecological crisis that, at some point, maybe it's not a good idea to continue this process of capital accumulation to invest in big projects. Maybe, I think, like there might be homeless people, but it's not because we don't have enough houses. So do we really need to invest in more infrastructure projects? I mean, there's certainly parts of the world that need, major investment, but I think in the United States, Western Europe, and Japan, I think we, and maybe China now, we've overinvested. We've built too much. We've created too much infrastructure that requires more resources to keep operating. And so I wonder, if you are looking at a possible future no growth economy, is banking really have a place in a no growth economy? I mean, it's a philosophical question.
We did just hear we interviewed some people from the National Infrastructure Bank, and apparently if you let your existing infrastructure fall into disrepair, I think it costs, I don't know, Walt, do you remember, was it like 5 times as much? Or
and it grows exponentially as the years go by. Yeah.
He wasn't talking about building more. He might have been talking about, and I would take it for granted that he meant maintenance of the existing stuff.
Yeah, that's what we're saying. The first thing we got to do is fix the existing problems. Yeah. I mean, we don't want high rises that nobody goes into, of course, like they do in China,
but we do want an electrical grid that is smart and that doesn't keep putting us in jeopardy in a variety of ways. We do want to utilize the new technologies that will make us greener and more regenerative. It'll take it takes a step beyond what we've expected from our public officials to be entrepreneurial and to be creative and to think outside of the box of functionality into generative thought. So that we can do new things. We have to do things a lot differently, which means that we have to keep doing the ones that, that are there that we all depend on. So whether it's farming or how we harvest our trees or, how we support worker cooperatives, which is, I think, an important emerging economic model for small businesses. Those are all things that public banks can stimulate that private banks are not interested in. We all just have to remember the only reason they're in business primarily is to make a profit and to fatten their coffers. I mean, that's fine, but it's not cutting it for us.
But beyond physical infrastructure, there's also the social infrastructure that needs massive investment, and that does not use significant physical resources, but has immense social benefits.
Judy,
Judy Rosenthal has been wanting to say something. Let me call on you, Judy.
Okay, thank you. And my second question, I'm really enjoying this discussion. Thank you to our 2 speakers. I'm interested in student loan debt. I know young people in their 20s and 30s who owe $70,000, $80,000. They're looking at a future where they will always be in debt. Is it my if we had public banks, we could offer them perhaps the kind of low interest rates that banks themselves get. I mean, there is a real solution to this, isn't there?
Or it seems to me you could just write off the student debt. I mean, if you allowed the banks will protest, of course. To some extent, much of that debt is government anyway. Yeah. Right. So the government could write it off. And the banks, if you told them, you can write that off and we're not going to put you into bankruptcy. That's the way they do it in China. Like they allow the banks to operate with these non-performing loans, and we could do the same. So that is one type of debt that it seems to me that you could just extinguish. Of course, you're going to get pushback in Congress from people that say, well, I paid off my student debt, or, I've got this other kind of debt. How come they get theirs written off and I don't get mine written off? I mean, it is a tricky problem, but in theory, you could just write those things off and let the banks carry bad debt.
Bank of North Dakota gives student loans. My brother went to medical school, North Dakota State Bank student loan, and came out of med school with no debt.
Oh, wow.
Yep, I came out of school with no debt, but that was in the 60s.
Yeah. Right, back when school was affordable. Yes, yeah, yeah.
Well, we're running out of time, and I think we should bring this very interesting discussion to a close, and certainly thank Ellen and Walt for such informative presentations. This will be on available on YouTube for people who want to view it later. You can access it through our website, globaljusticecenter.org. Thank you again, Walt and Ellen, and thanks to the members of our audience here who've helped to spark this interesting discussion. I hope you'll join us again next week when we will have a webinar on the right, the social and economic roots of today's right. I will be one of the speakers along with Joe Belton, who you have seen was in the Zoom room today as a silent participant, but you'll hear from him as well as myself next Monday. And just as a heads up, the following webinar will be on the occasion of the 20th anniversary of 9/11. And we will have Medea Benjamin and Vijay Prashad speaking on the long-term consequences of 9/11, one of which, of course, we're now seeing played out in the final day of the U.S. military occupation of Afghanistan. So hope to see you again on those Mondays and future Mondays as well. And finally, thanks to our webinar team, Roberto Robles, Liz Mistress, Gregory Diamant, Olivia Canales, and myself. And now this is Cliff Durand signing off until next Monday.
Thank you very much, everybody.
Thank you. Great
Yes,
program.
thank you. Great talking to